On the call this morning, U.S. markets are down over 2% as S&P downgrades the U.S. credit rating one notch from AAA to AA+. The S&P is now down almost 13 to 15% off the highs of the year. China and Australia officially joined Brazil in bear market territory, over 20% down. The European market sell off about 2% despite moves by the ECB to purchase Italian and Spanish bonds. Gold hits a new all-time high at $1,700 an ounce, and silver is back above $40 as investors rush into precious metals as the U.S. downgrade takes effect. I'm Scott Redler, and the morning call starts right now. Good morning. I'm Scott Redler, Chief Strategic Officer with T3Live.com. Alex is out today. I welcome you to today's morning call. I know everyone's waking up right now. You've been reading the headlines all weekend long about the S&P downgrade, about the problems in Europe, about everything that's fundamentally wrong here around the world. And none of this is in your power to change. The only thing that you could do is handle and embrace your own financial world. And we've been talking for the past week or two about the technical weakness that's been adding up in this market. We've been talking about going under the moving averages. I've been saying, look at this very bearish head and shoulders top pattern. Everyone makes excuses on why the stock market goes up or down, but if you have the right plan using a technical analysis base with chart patterns and common sense, you could always get out of the way of times like this, and then you could actually embrace the volatility, because during a correction cycle, it could be one of the most exciting times in the market and the most profitable if you approach it with a plan. So if you take a quick look here at the spiders, this is the pattern we've been talking about. You look over here, you'll see this head and shoulders top, the left shoulder, the head, the right shoulder. We talked about this neckline going across 1250. A lot of guys got out of their stocks as we broke the 50-day moving averages, and then you had one more chance to get out here. Okay, the measured move just took place. We went all the way down to about 1165 to 1180 before bouncing on Friday. So the key now is what's next. If you're in cash, which hopefully you're in a lot of cash considering what we've been talking about, this is exciting. As an active trader, what I'm going to be doing is this. I'm going to be trading a level versus a level here. We have 1167 as the low of Friday. That is my key technical level. What I want to see is what we saw on Friday. I want to see if we open up down, can anything go positive? Can some financials go green? Can some high beta stocks go green after being down $5, $6? We saw a little bit of this on Friday, so that'll help take us off our lows. So in the first 30 to 60 minutes, you want to see if that could take place. If that doesn't take place and we break below 1167, there are some other levels you have to take in place. So you can't just blindly buy because people are saying it could be priced in. The market has to tell us that. So if you look back at this chart, you will see that we go all the way back to September of 2010, which is where we broke out from. We broke out, retested right around here. This takes us to about 1120 on the S&Ps. So if we break below that 1167 level, I'm going to be looking to be a probably scale down buyer, which isn't for everyone. It's for the professional, from 1140 down to 1120, and if it happens quick, that could be a decent area. Now, if you're an active investor, I don't think you should put all your eggs in one basket. Obviously, we talk about a tier in, tier out system. If you sold correctly, in this area is a spot to probably buy a tier 1 long in the spiders or the Qs, whichever indice you want to go with, and then you want to have a plan with the key stocks that are just the best of the best. Don't look at second tier, don't look at third tier, look at the best acting stocks in the market in each different sector, and I'm going to go over them after this.